It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. Still talking, U.S.-China trade negotiations continue for a second day. We are live from Lancaster House in London. The fourth day of unrest. President Trump deploys additional troops as anti-deportation protests spread beyond L.A. And the AI race ramps up. Meta forms a superintelligence AI group while Apple expands its deal with ChatGPT. So we're a little changed yesterday on the S&P, and as fate would have it, we're a little changed yet again this morning. What is going to excite these markets? There's a lot of risks on the horizon, from trade talks to CPI to bond auctions. We are still just 2.3% away from all-time highs. There's a little move in treasuries yesterday, too. In fact, it was the slimmest daily trading range for treasuries in 6 weeks. What do we get? We get a rally this morning. We're down by about 2 basis points, down by about 2.5 basis points for your 10-year yield at 4.44. Let's now get you some stocks to watch here. With that this morning is Bloomberg's Joe Easton. Hey, Joe.
Morning, Danny. So Novo Nordisk shares edging higher this morning. This after the Financial Times reports that Purvis Asset Management, a hedge fund and an activist, has bought a stake in the weight loss drug maker, and that is pushing the shares up higher. According to the report, they're going to look to potentially have an influence on who Novo appoints as their next chief executive. So a bit of a sentiment move on that one. Then a bit of a segue on the next one, because McDonald's downgraded today over at Redburn, and we're seeing this stock declining around 1.3%. Redburn writing a note that GLP-1s, weight loss drugs, are going to see people cutting back on all of their Big Macs and other burgers as well. I quite like their katsu chicken wrap. That's a new one for me. But McDonald's downgraded today. They've also got a sell on Domino's Pizza due to the weight loss drug worries. And finally, a quick check back on Apple. Slightly lower once again in the pre-market following that update. Well, it's just ticked green. That's just my luck, isn't it? But that follows disappointment on that AI news at the event in California yesterday. And as usual, check out on the terminal the before the bell opening wrap, summing up all of these moves and more, Danny.
Oh, man, I'm also a sucker for a katsu wrap. I think it might only be in the UK, though. I need to come visit, Joe, and get my hands on that.
You need to come over. It's the perfect reason to come back to London.
I'm sure our bosses would agree that that's a good reason to send me there. Joe, thank you so much. Joe Easton, we'll catch up with him later in the hour on those movers. And in just moments, Ella Hoxha of Newton joins us for her read on the bond market. Later this hour, we'll also look ahead to Wednesday's CPI data with State Street's Cayla Seder. Now, Newton's Ella Hoxha weighing in on the question of, are we at peak fiscal concerns? She writes, quote, bonds and credit price a soft landing. So there is room for surprises to the downside there. But for the time being, volatility remains contained. Ella joins us now, head of fixed income at Newton Investment Management. And contained it is, Ella. We are barely moving yesterday and today. A lot of risk between CPI, trade talks, and auctions. What do you think could move the needle this week?
Yeah, I mean, we were quite sensitive to the labor data that we got last weekend, so last Friday, and so that probably caused a bit of, a bit of a relief, I guess, for the short positions in rates. I mean, going forward, we're still sensitive, I would say, to data, but at the same time, what is the talk du jour? What's the topic of the day? It's very much around the fiscal concerns and hence why we pose the question, are we at peak fiscal concern, at least for the short term? Structurally speaking, we don't think we are. But for now, for the next few weeks or months, if you like, we could see some relief, I think, on that end.
That's even interesting, Ella, because it feels like every day there is a different driver on the fiscal side. It's one day it's trade, and that seems to be the focus today with these talks in London, or it's the one big beautiful bill making its way through Washington, D.C. Given what you're saying, is it the one big beautiful bill that is more important to these markets than what's happening in London right now?
I would say so. I mean, in the sense that for bond markets, this is pretty much a contentious point, and we've discussed this a few weeks back in a different show with Bloomberg. But broadly speaking, the breaks in precious metals are very interesting, right? So you saw palladium yesterday cause a major break. You had silver probably last week into this week. So you're having some major breaks in precious metals that are telling you that there is some diversification away from bonds, which typically play safe value, and going into precious metals, which are probably, perceived, at least from investors, as a better store of value in this kind of environment we're operating in, where fiscal concerns remain elevated. So I think that's quite an interesting development for markets.
But Ella, how do you have on one hand this break for precious metals, a gain there, and credit spreads still tight, equity risk markets close to all-time highs? Is there not a tension there?
Yes, I mean, but if we think about it, I mean, data hasn't been terrible. So the economy is still, trotting along, as we say here in the UK. In terms of inflation, no one seems to be utterly concerned at this juncture. And we passed that sort of peak fear period that we saw over the month of April. And of course, sentiment got very bearish leading into that and following that immediately. And so when you look at credit, perhaps the view from investors is it's not government debt, right? So they feel they're lending to corporates that have better balance sheet than a lot of governments do right now. And so it's not entirely irrational, right? Now, should you price 20% odds of recession, perhaps you can question that. Maybe that should be higher, because the tail, as we argue, the tail risks have gone up on both directions, whether it's this fiscal concern on the bond market, or whether it's this growth concern on the other hand, where we're due a correction on the growth side, for some time now. So look, with those bigger tails to us, it feels like it's the environment where you probably want to run a little bit less risk, but it doesn't necessarily mean you turn outright bearish on credit or on equities here. I still think bonds will lead the charge here, by the way.
Ella, Torsten Slok yesterday made the argument that now that half of all debt issued in the U.S., half of all fixed income is coming from the government, that it will crowd out investment into the private sector, into the consumer sector, because you have more dollars needing to chase all of that coming out of the government. Is there a one-to-one relationship? Is that an issue, the supply, not necessarily just driving yields higher, but taking money away from corporate credit?
Well, it hasn't been the case so far, in the sense that corporate spreads have, as we discussed, have remained very well behaved, and there's been lots of demand from our clients coming into credit funds. So that's not been corroborated. Now, of course, if in the future, as we anticipate, term premium in bond market is going up and continues to do so, and bond investors demand more yield to lend to governments, that will filter through into corporates as well. That goes without saying. But perhaps we are in a different regime, right? This regime is one that is really very much driven by the fiscal concerns, and so it's govies that drive that. But at the end of the day, governments can tax corporates, and it's not the other way around. So you have to be cautious how far you push that argument.
Ella, you mentioned at the start of this that, of course, the data matters. The data has been really patchy, but I want to ask what you think of what we got from the New York Fed inflation survey yesterday. Inflation expectations dropped by 0.4%, which essentially erases all of the pickup in expectations that we saw after Liberation Day. What do you make of the survey data? At least just given from the Fed consumer survey, things seem to have improved from a sentiment measure.
Yes, because sentiment was very much driven by policy, was driven by tariff fears, and that's how we got into this extreme sentiment surveys. And so it makes sense to unwind some of that. Long-term inflation premium or pricing in markets didn't shift that much. It was more of the short-term stuff. So it makes sense to get some stabilization. But, when you look at bonds, I don't think you see much priced in terms of inflation risks down the road. And we would argue medium-term inflation concerns should be higher than they are currently. And the reason for that is quite simple, is this fiscal story we're discussing, right? So if you're going to try to stabilize yields, you're going to run more risk on inflation over the medium term, and we're talking 2 to 5 years. However, over the short term, you're going to be seeing these bouts of sentiment extremes, just as we saw in 2021, 22, and just as we're seeing this year as well.
Surely some of what we're getting from the corporate side, Ella, they can't just keep absorbing price increases. We saw the effective tariff rate, new data coming in about 7%, which is much higher than it had been. There have been announcements from Ford, from Hermes, about lifting their prices. Of course, not everybody is going to be going out and buying a Birkin bag. But Ella, when we get things like CPI, is there a risk that goods inflation is going to start to show up already?
I mean, look, I think over the short term, yes, certainly in the US, it's more prevalent. We are not concerned in other markets. I think the opposite is true in Europe, out of Asia, particularly in China. So you have the opposite problem. There's a bit of an inflationary dynamic going on in Japan that goes without saying, but those are more exceptions. So yes, pertinent to the US, you can see some of that. But relative to what expectations got to in the month of April, we're still in a better place. So I don't think inflation is the driver for bond markets right now. It might be the case, but I think that's a much later story. We're talking 26 onwards. So I think for now, it's very much this, who's going to pay for this fiscal spending, and, what will central banks do in response to any sort of growth shocks that we might get over that period. I think that's kind of like the big mover for markets right now.
Ella, we will keep an eye out for that big mover. Thank you so much for joining us this morning. Ella Hoxha of Newton Investment Management. Now let's get you some other top stories that are trending on the terminal this morning. Russia unleashed a sweeping drone attack on Ukraine, hitting Kyiv and Odessa. Ukraine's Zelensky said the attacks resulted in fatalities and at least 13 injuries. Russia and Ukraine are currently undertaking a major prisoner exchange after peace talks last week. A venture capital fund backed by Fidelity's Johnson family is looking to unload its Chinese tech holdings. Bloomberg sources say that Abigail Johnson's family VC, 8 Roads, began exploring the sale of all of its investments in about 40 Chinese companies in the face of rising tensions between the U.S. and China. The firm was an early investor in China's internet sector. Elsewhere in China tech, the founder of Huawei has dismissed the impact of Washington's curbs on American semiconductor exports to China. In an interview with the Communist Party's official newspaper, he said domestic firms could resort to chip packaging or stacking to get results similar to using advanced chip technology. Export controls are on the agenda in negotiations between the U.S. and China in ongoing trade talks in London. Now, speaking of that, it is day 2 of the negotiations happening in London. We're live from Lancaster House. We'll bring you that next on your Bloomberg Brief.
We are doing well with China. China's not easy. We want to open up China, and if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
U.S.-China trade talks continuing into a second day in London after 6 hours of discussions on day 1 yielded no apparent breakthrough. Joining us now is Bloomberg's Anne-Marie Hordern, who is live from Lancaster House. Anne-Marie, great to see you this morning live from London. Where do we stand on these negotiations?
Good morning, Danny. Well, the delegations have yet to arrive. We're still waiting for the Chinese delegation to arrive. That's being represented by Vice Premier He Lifeng, as well as the U.S. delegation, which really the driving force behind that is Secretary Bessent, the Treasury Secretary, who yesterday when he was leaving the meeting and we shouted some questions at him asking how the meeting went, he said it was a good meeting with a thumbs up. Commerce Secretary Howard Lutnick, who's in addition from the Geneva talks, said the meeting was fruitful. What we stand here today is basically trying to understand the parameters of what each Beijing and Washington are willing to concede. We do know that the U.S. is asking Beijing to have a more advanced pace when it comes to things like rare earth minerals and magnets, which is critical for the technology industry and the defense industry. For the United States, they have signaled that potentially there would be an easing of export controls, which makes sense why Commerce Secretary Howard Lutnick is at these talks in London. The question is, what is the line? Our reporting is that potentially these are recent export controls, things like chip design software, potentially some nuclear materials. The question, of course, becomes what is the red line and what does it mean for export controls going forward? Kevin Hassett did signal they wouldn't go as far as those advanced chips, those H20 chips from NVIDIA, that NVIDIA made to be Chinese compliant, Danny, during the Biden administration.
Well, we even heard from the Huawei founder who said the tech's not that important to us coming from the U.S. Anne-Marie, does it seem like China has the upper hand just given that?
Potentially, and we saw that actually, Danny, you were one of the first individuals to report about this when it came to DeepSeek. And I spoke to Jensen Huang just a few weeks ago before he went into the Oval Office to see President Trump. And I asked him, how far behind is China when it comes to the advanced chips and advanced technology? He said China is not behind. They are very, very close and basically saying they are right in lockstep with the United States when it comes to developing these chips. So it does seem that China has workarounds. But of course, this becomes a question going forward. If the United States is willing to give on things like export controls, what becomes then the red line for national security, and what does it mean for export controls going forward? This meeting in London is really about de-escalating only the escalation we saw in the past 4 weeks, getting back to those Geneva talks.
Yeah, it just shows you that the full slate of issues, getting through them is going to take some time. Anne-Marie, excellent reporting. We'll catch up with you later in the hour with any developments. That is Bloomberg's Anne-Marie Hordern live from Lancaster House in London. Now let's stay with tech. But elsewhere, the AI race is ramping up. Mark Zuckerberg is said to be creating a new superintelligence team at Meta that, according to Bloomberg sources, the goal is to overtake other tech companies in the space and achieve artificial general intelligence, the notion that machines can perform as well as humans at many tasks. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, when I first saw this story, my first question is, how is this different than what Facebook, than what Meta is already doing?
Well, I think the fact that it's around artificial general intelligence rather than generative intelligence is the big thing here. It's really looking at, I guess, the kind of mid to long term of where the AI industry is going and making sure that they are a leading player in that. And this really kind of complements all the other work they're doing on things like Llama, for example, their foundation model, which is very much in their products today. This is about thinking about the future and this kind of next level of artificial intelligence, which will be, like I said, maybe 3 to 5 years before it actually becomes something that's part of their products.
So that's Meta, maybe as a way to get investors excited. Is Apple a lesson in their developers conference, Matt, in how not to get investors excited?
Yeah, I think that's a fair point. But, I think Apple, again, is a company that kind of does its own thing its own way and kind of plays for the long term. And I think, whilst there wasn't any kind of big showy announcements around AI, there were lots of little things dripped into their products. For example, the live translation that's now in messaging, the kind of intelligent suggestions that maybe you want to ask a survey in a group chat, things like this that they're dropping in, which are evolutions for them, and that they're putting products into their offerings which are kind of really high quality, and they know that they work. And that's why we heard yesterday that they continue to push back an update to Siri because they're not happy with the quality of the developments they've made. So that frustrating for investors, frustrating for customers. But I think they're doing just enough to keep customers engaged with the platform to avoid them churning to an Android.
Matt, it was the last developers conference that we saw this announcement of a new Siri, and then it goes by without a mention of it. Is there some degree which they're trying to set the bar lower just because it is taking them longer to avoid the disappointment of what we had last year?
Yeah, I think so. And obviously, we've seen some of their rivals struggle with the latest releases of their own AI updates, including Meta. So I think it's not straightforward, these investments in AI. And I think I'd say with Apple, everything is about quality and seamless integration. So I think that they're really focused on making sure that the enhancements they put in to the iPhone and their other devices really kind of meet customers' expectations, which are very high.
Well, when it comes to one of their main suppliers, TSMC, Matt, had earnings where they showed their revenue surging by 40%. Of course, they're a big supplier, not just to Apple, but NVIDIA. Does this just underscore the insatiable demand for AI?
Yeah, it does. And obviously, that there was a specific dynamic behind that 40% growth in May, and it was a bit slower than the 49% in April. And really what we're seeing is customers stockpiling technology for fear of what curbs are going to persist given the China-US trade war that you were just talking about. So I think, that's kind of reflection. I think that's going to remain strong into June too. Obviously, if we do see breakthroughs on things like the rare earth minerals and also that the US easing trade embargoes on technology into China, that may temper people's stockpiling, but actually it will kind of bring back more natural demand. So I think the demand and appetite for AI is pretty insatiable right now, driven primarily by the kind of really big tech firms. But there's a kind of big long tail of sovereign investment and smaller corporate investment coming through too. So I think the demand outlook looks pretty strong for now.
Matt, thank you very much for that update. That is Matt Blocksham of Bloomberg Intelligence. Now, coming up, there is one major story on the front pages of all your newspapers this morning. President Trump deploying active duty Marines to protests in L.A. We'll have the details next on your Bloomberg Brief. This is Bloomberg Brief. I'm Danny Berger in New York. Let's get you some front page news, what's making headlines at major publications. And for the second day across the country, there is one story dominating the front pages, and that is the protests in Los Angeles. About 150 people have been arrested in L.A. since Friday. Police have been using tear gas and less lethal ammunition to disperse protesters. The latest development, the Pentagon's move to send 700 Marines to L.A. They will join the National Guard troops already in the city. The New York Times writing that the president is pivoting from his feud with Elon Musk last week to focus his political ire on California Governor Gavin Newsom. Newsom said that he would sue the administration over the planned use of Marines. The Financial Times, meanwhile, reporting that a growing number of military veterans are objecting to Trump's interventions in L.A. A Marine Corps veteran called the move a major shift in civilian military norms and a dangerous precedent. Now, a quick check on markets as we head to the half hour. The S&P 500 just trying to trot along. Little change, very common in markets. What changes that? It is day 2 of talks in London with CPI tomorrow and bond auctions on deck. Coming up, we'll push ahead to that inflation data. We'll catch up with Cayla Seder of State Street. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. Still talking, U.S.-China trade negotiations continue for a second day. We're live from Lancaster House in London. The fourth day of unrest, President Trump deploys additional troops as anti-deportation protests spread beyond L.A. And the AI race ramps up. Meta forms a superintelligence AI group while Apple expands its deal with ChatGPT. Still, those things uninspiring for a market that is going a whole lot of nowhere. S&P and NASDAQ futures little change this morning after being little changed yesterday, still 2.3% away from all-time highs. Meanwhile, for your bond market, we are looking at slightly lower yields, about 2 basis points across the curve. More easy inflation expectations coming from the New York Fed survey. We also have CPI tomorrow and bond auctions, so plenty of catalysts for this market. Let's look at the individual catalysts. Back with us with your stocks to watch. Here is Joe Easton. Hey, Joe.
Hey, Danny. So Novo Nordisk getting a boost today. The ADR's rising around 1.6% at the moment. The Financial Times reporting that Parvis Asset Management has bought a stake in the company. We don't actually know how much they've bought, but the company is said to be pushing for some influence on who Novo appoints as its next chief executive. That is Parvis's intentions, according to reports. So we're getting a bit of a boost on that stock today. Then we've got a bit of a segue into food stocks because we've got a downgrade for McDonald's. A fascinating note out from Redburn this morning on the restaurant space, which is actually named Hunger Games. So appreciation for that naming of that note. But they're talking about how the weight loss drugs made by Novo Nordisk will actually reduce consumption of McDonald's, also even hitting potentially Domino's Pizza. So we're seeing a downgrade on both of those stocks today, and both of them low. We can see MCD falling around 1.3% following that note there. And then finally, a quick look at Uber, because a report saying the company is going to start trialling robo-taxis here in the UK. So some excitement for us on that one. This is with a SoftBank partnered firm, potentially going to be launching here in London. Uber shares heading around at 0.6% higher this morning. Danny.
Joe, thank you very much for that update and for your work this morning. That is Joe Easton. Now, it is a busy calendar, as I mentioned. The first roadblock ahead is U.S. CPI data. That comes on Wednesday. State Street's Cayla Seder writing in on the recent data, writing, quote, inflation data as of late has shown a balancing act, and we are wary of how long that can continue for. Joining us now is Cayla, macro multi-asset strategist at State Street. Cayla, does it continue on for some time? Are you expecting the CPI data to show any of the inflationary impact of tariffs?
Hey, Danny. Thanks so much for having me today. Yeah, it's interesting because we do see tariff impact on specific sectors. So one thing we're able to do is we can see prices every day. And when we look at different sectors, we do see very high prices in terms of electronics, in terms of household products, and we are starting to see some rises in apparel as well.
Hey, Cayla,
So
I'm just going to
it's
take a
definitely
break right there. We'll get back to you, but I just want to go over to London now, where Anne-Marie Hordern is standing by as Representative Jamieson Greer enters the talks. Let's have a watch and a listen.
Good morning, Danny. That's right. Ambassador Jamieson Greer just entered the building at Lancaster House. This is the second day of talks. We did have the Chinese delegation arriving about 10-15 minutes ago. That was led by Vice Premier He Fang. We're still waiting for Commerce Secretary Howard Lutnick and Treasury Secretary Scott Bessent, who is leading the U.S. delegation, to arrive. But Ambassador Greer is in the building. Of course, he's the USTR ambassador, former chief of staff, of course, to Robert Lighthizer of Trump 1.0. So he was there for the first trade war with China and the phase one trade deal. Again, we're still just waiting for Secretary Bessent to arrive and Secretary Howard Lutnick from the Commerce Department. More U.S. staff is arriving. Danny, it's the second day of these talks. Remember, they met yesterday. These talks, basically recalibration of what we saw from the U.S. and Chinese delegations in Geneva. There was some escalation following that Geneva meeting. President Trump and Xi Jinping got on a phone call together, and that really led the path forward for having these talks today here in London. And actually, Danny, I do see Commerce Secretary Howard Lutnick. Commerce Secretary, how are the talks going?
How are the talks going?
We're live on Bloomberg right now. How are the talks going?
We've been all day yesterday, and I expect to do all day today. So they're going well, and we're spending lots of time together. Thank you, Mr. Secretary.
Thank you, Mr. Secretary. Danny, I'm not sure if you heard there. Commerce Secretary Howard Lutnick, as he enters Lancaster House for day two, said they talked all day yesterday, which is true. We were here till about 8:30 p.m. local time, and he said they're planning on talking all day today. He said the talks are going well. We should note that Treasury Secretary Scott Bessent has to be back in Washington, D.C. tomorrow because he's testifying on the Hill. So the talks have to end today. We are seeing good optimism, though, when you hear from the Commerce Secretary. It looks like Treasury Secretary Scott Bessent has also just arrived. We are waiting to see him get out of his car. He's the last one to arrive. Treasury Secretary, how are the talks going? Secretary Bessent, how are the talks going? All right, no talk from Secretary Bessent on the way in, though, but we did hear from Commerce Secretary Howard Lutnick just a moment ago saying he thinks the talks are going well, and they plan, Danny, to talk all day today. I'm just going to get back into position here. So now we have the full teams in place, the Chinese delegation and the U.S. delegation, both behind me in Lancaster House for day two. Quick recap of what each team wants to see. Beijing wants to see an easing up of those export controls, Danny, and the United States wants to see an advanced pace of those rare earth and magnets.
Anne-Marie, excellent work. Thank you so much for your coverage. And again, the Commerce Secretary Howard Lutnick responding there to Anne-Marie Hordern, saying that the talks are going well and that he anticipates that they go all day, much like they did yesterday. Cayla Seder of State Street is still with us. Cayla, I don't know if you heard much there, but of course the Commerce Secretary saying that the talks are going well. What is the bar for this market to continue trade optimism, to continue to rally with what we get out of London, which of course is where you happen to be right now too?
Yeah. You're right. The bar is starting to get higher because we are starting to see good news being priced in. One thing that's really interesting, though, when we look at our flow data and our holdings data is that actually tech hardware is one place where we haven't really seen investors come back into that space as much as they have other kinds of sectors and industry groups that are exposed to this tariff trade. So I would say, positive news could be a pro that hasn't been priced into the tech hardware space. So that's something we're keeping an eye out for.
Elsewhere in tech, not the hardware space, but the hyperscalers, the Mag 7, Cayla, it does feel like it's been the fuel for this market. We learned that Facebook, that Meta today, is spending more money on trying to build artificial general intelligence. Apple trying their hardest to catch up too. The CapEx has been remarkable there, where everything else has slowed down. Are we going to get back into an environment where those types of names become something of safety, become something of a haven, with other companies starting to slow down given the uncertainty around trade?
I think that's right, especially given where we are with interest rates, right? So because rates are staying elevated and the Fed isn't in a rush to cut rates, it means that this supports more concentration, because the companies that we've discussed, kind of these general themes of these large cap companies that are able to continue to produce on the CapEx front and invest in these really growth factors, are companies that have strong balance sheets and are able to navigate an elevated rate environment. It's companies that don't have the same access to funding and have higher costs of investment that are going to struggle in this kind of environment, which supports continued concentration.
On that higher cost of funding, how vulnerable are we to continued higher rates? Is it still a period of extend and pretend? Defaults have been relatively low, Cayla. Does that change?
I do think this period of extend and pretend is going to continue for now. When we think about, especially bringing it back to the inflation conversation, things we're keeping an eye on are that, we're kind of in this balancing act right now where you do see upside price pressures in certain sectors, but that's being counterbalanced by lower energy costs. And if that dichotomy doesn't continue, we could see upside for inflation, which means that, we'll continue to see cut expectations being pushed out further.
Well, to that point, you have seen some of the consumer sentiment measures come in, Cayla. Yesterday, you had the New York Fed survey where you did a round trip on inflation expectations. It dropped, and giving back what we did see as the uptick in April after Liberation Day. Can you even trust these sentiment measures, Cayla?
Sentiment measures are, certainly a little all over the place. I would say one thing that we're really focused on when it comes to inflation expectations is not so much consumer sentiment expectations, but market sentiment expectations, especially keeping an eye on those longer term break evens. So thinking like 10-year break evens, things like that. And those have been incredibly stable. And so for the Fed, this is really important because this is a sign to them that longer term inflation expectations are still anchored.
Okay, so if we still have anchored inflation expectations, does it matter for the Fed that the data we get in, the CPI tomorrow, Cayla, it is a Fed that is not concerned necessarily about the here and the now, but where inflation goes going forward because of trade, because of tariffs?
Yeah, I think what this means is that moving forward, the Fed is going to have to, of course, they're data dependent. However, I think what the market will end up doing is you can kind of look through some of the data in the short term because there's still these catalysts that we have to see how trade negotiations are going to work out. We have to see, there's a lot of uncertainty out there. And I think we've heard that in the Fed's rhetoric. So therefore, their default is to remain patient. And so I think that's the messaging that we'll probably get in a couple of weeks from them.
Meanwhile, for the bond bears, they get excited about the auctions, Cayla. Tomorrow we have a 10-year auction. The following day, a 30-year auction. The auctions since Liberation Day have been fine. Maybe not fine in Japan, but for the U.S., for the most part, the auctions have been fine. Is there any reason to suggest that might change?
Yeah, we're keeping an eye on auctions. And like you mentioned, auctions have been pretty okay recently. And so I think what this means moving forward is, yes, there's going to be a lot of focus, especially on that 30-year auction. I would say, looking at the auctions last month, if any were relatively weak, I would say it looked like the 30-year. But again, the picture was still okay in aggregate. And so this is something that we're definitely going to keep an eye on. When we look at our real money data, where we see preferences across the curve is for the front end. And so that's why it's so important to look at what's happening at the long end. Do we continue to see a lack of demand there? And will there be any signs of weakness? So far, we haven't really seen that just yet. But with that said, we see a preference to stick at the front end of the curve rather, which makes sense if the Fed is in this place of pause for now.
Cayla, it is so wonderful to see you. Enjoy the rest of your time in London. Please come join us again when you're back in New York City. Cayla Seder of State Street. You're watching Bloomberg Brief. You're watching Bloomberg Brief. I'm Danny Berger in New York. And the Trump administration has escalated its response to the anti-deportation protests in L.A. 2,000 additional National Guard troops and 700 Marines have been mobilized, deploying active duty military on the ground after a fourth night of tensions between residents and authorities. For more, we're joined by Bloomberg senior editor Bill Ferries. Bill, what is the latest in L.A.?
Hi, thanks for having me, Danny. We've seen a caravan of buses heading from 29 Palms, the military base, to Los Angeles, carrying those estimated 700 Marines who the president has ordered to be deployed, alongside up to 2,000 National Guard troops who have been also authorized. On the ground so far, we've only seen about 300 of those National Guard soldiers protecting kind of some of the federal buildings there in Los Angeles, but tensions remain high. It was a little bit calmer last night in Los Angeles than it was over the weekend when we saw those Waymo cars getting burned and some of those really dramatic clashes between the protesters and police and National Guard. It was a little quieter on Monday, but the war of words between President Trump and Governor Gavin Newsom has really continued and escalated. California is now suing the federal government to try to get them to take back those National Guard and military troops that have been sent out. We'll have to see how tensions flare up or de-escalate in the coming days and the week ahead.
Elsewhere in Washington, D.C., it's a busy agenda. The one big, beautiful bill is still now making its way through the Senate. And, Bill, we've seen House Speaker Mike Johnson trying to urge the Senate not to change anything about the SALT deal that they've reached. What is the risk that there is a change to SALT by the Senate?
Yeah, so that's the state and local tax deductions that are so important to a lot of Republicans, particularly in places like New England, New York, California as well. There was a limit of $10,000 under current legislation. The bill that went through the House, narrowly passed the House, would raise that deduction to $40,000. So when you're looking at a $10,000 base and a potential $40,000, some Republicans in the Senate see a lot of room for negotiation there. That's a line that Mike Johnson is saying Senate Republicans shouldn't cross, but it's hard to see that 40,000 level sticking in final draft out of the Senate. That means it would have to go back to the House. Of course, the margin of the Republican margin in both the House and the Senate is really narrow. So even a small thing like this can have big consequences on getting that bill to President Trump's desk.
Bill, we really appreciate your reporting this morning. That is Bloomberg's Bill Ferries. Now, a Bloomberg scoop, Meta is recruiting a team of AI experts. It's calling a superintelligence group to try and win the race against other companies and achieve artificial general intelligence. For more, Bloomberg's Tom McKenzie joins us now. Tom, Meta has already been spending billions. How does this differ from what they're currently doing?
Well, it really underscores, I think, Danny, according to our reporting, just the urgency with which Mark Zuckerberg is now taking the race towards AGI, or human-level intelligence on AI, and feeling that, in fact, Meta is playing catch-up at this point, particularly versus OpenAI and Google. And that is why, according to our reporting, he is putting together a team of about 50 superintelligence of the brain trust that he is hand-picking himself. He's been having conversations in his own homes around the US and California to try to persuade key researchers and key engineers to join this team to accelerate that move to AGI, which he then wants to bed into their AI services, into their chatbot, even into their Ray-Ban glasses as well. And part of the pitch that Musk has been making to these key names that he wants to put together is, look, we have the financial resources. We don't have to go out and fundraise. That's a bit of a nod to OpenAI. We have our own capital, our own financial resources from the advertising business, which is still very robust, and we can channel that into the data centers and the infrastructure. And he thinks they should and could be winning in terms of that race towards AGI. Disappointed about Llama 4, the most recent model. They've delayed another model as well in terms of the performance and the uptake. And this is Musk's, or I should say, Zuckerberg's response to this story. He's also invested, according to our reporting as well, looking to invest about $10 billion in scale AI. That's the focus on data. So he wants a data piece, and he wants the engineers and researchers to be able to implement and get to AGI ahead of those competitors.
Tom, you're forgiven for saying Musk because everybody is throwing money at this. Everybody is spending heavily. And on that note, Apple has been one of these companies that we've been looking at. How is their spend paying off? They had their Worldwide Developers Conference yesterday. Tom, is this a conservative Apple that we heard from this time around?
I think that's the right way to frame it, actually, Danny. And we talk about a gap, and we talk about the competitive gap that is opened up between Meta and OpenAI and Google. Well, it's certainly there when it comes to Apple and its ability to integrate AI solutions across its hardware devices. What it did do, and what they did announce yesterday, was they're going to be building and deepening that relationship, in fact, with OpenAI. So on the infrastructure side, powering some of their AI solutions, that deeper partnership is going to be a benefit. But what they haven't done is come out with a bazooka announcement, for example, around reworking Siri to integrate AI into that product that is really going to drive demand. At least that's a view from analysts. UBS analysts, for example, saying the announcements, and I'm paraphrasing, were piecemeal yesterday. I'm not paraphrasing here. UBS saying it's unlikely to change the demand dynamic in terms of upgrading your phones from Apple's consumers.
All right, Tom, thank you so much. We really appreciate your reporting this morning. That is Bloomberg's Tom McKenzie. Now, coming up, I'm going to scurry away to the surveillance set, but Bloomberg's Anna Edwards is going to be getting you set up for your trading day and your day ahead. A lot on the agenda, not just for today, but for this week between CPI and bond auctions. That's coming up next on your Bloomberg Brief.
This is Bloomberg Brief. I'm Anna Edwards here in London. Now a look at what is ahead for today. The NFIB small business optimism data coming at 6 a.m. Eastern time. How will that stand up in the face of all the uncertainty created around trade policy and other policy areas? Then Defense Secretary Pete Hegseth testifies to an oversight hearing before the House Appropriations Committee. That is at 9:30 a.m. And also on the agenda, GameStop earnings come after the market closed. So that's one of the corporates that we will be keeping an eye on. Let's have a check on the markets for you. This is the picture on U.S. futures. Not a great deal of movement in the U.S. futures picture. We are waiting for any headlines coming out of those trade talks between the U.S. and China. The U.S. dollar is on the front foot a little bit this morning, and the U.S. 10-year yield just moving by 2 basis points, as you see, as we wait for an auction. That's one of the big set pieces, I suppose, of the market week. Still to come, that and U.S. CPI data. On the European front, then, this is the market that hands over to you guys in the United States. The FTSE 100 actually touching a new high, up by 0.4% this morning. Part of that being driven by some weakness that we have had in the currency. The pound is actually down by 0.5%. But we also had some slightly disappointing data around the labour market picture that's weighed on the pound, increased dovish expectations around the Bank of England, and the DAX on the back foot, that on the back of a Bank of America note, suggesting that maybe we've travelled a little too fast, too quickly on some of those defence names that have been attracting a lot of attention in the German market. Let us tell you, here in London, we are watching Lancaster House, the 19th century building where we see US and Chinese negotiators gathering to talk about trade. We've already heard from the US Commerce Secretary Howard Lutnick. He was taking questions from Bloomberg surveillance Anne-Marie Hordern, who was outside that building, and he said that the talks are going well. They are expected to go all day Tuesday. They went all day yesterday, of course. We'll see whether they manage to get to any narrow conclusions around rare earths and tech, or any broader conclusions on the trade agenda between these two nations. That is certainly going to be a big focus for markets as we go through this trading day. That is it for Bloomberg Brief. Surveillance with Danny Berger is still ahead. This is Bloomberg.